As the Sunday silence settled over Paris last weekend, a different sort of hush fell upon the city's financial district. In the hushed offices of the nation's bond traders and sovereign debt specialists, an uncomfortable truth was sinking in. France's economic future is poised on a knife's edge. The upcoming parliamentary elections have sent tremors through the markets, raising fears that a sudden lurch to the right could imperil the nation's finances. As political winds shift, investors are nervously eyeing Thursday's bond auction like umpires scrutinizing a close play at home plate. This €10.5 billion debt sale will be a critical test of market confidence in the French Republic. To the economically unendued, a bond auction may seem an obscure ritual of little consequence. But these debt sales are the financial nuclei that power the government apparatus. A failure to attract sufficient investor demand could set off a contagion of higher borrowing costs, spiraling deficits, and a debt crisis that would rock the foundations of the French state. The stakes could not be higher, nor the timing more fraught. Marine Le Pen's National Rally Party has surged in the polls by stoking public unease over immigration and playing to atavistic cultural fears. While Le Pen has disavowed her party's previous Eurosceptic rhetoric, her free-spending economic platform leaves traders haunted by the ghosts of the European debt crisis. If Le Pen were to seize the parliamentary majority, the ramifications would be seismic. Finance Ministry models project borrowing costs could surge by upwards of €5 billion over 5 years, as investors demand higher premiums to hold France's debt. This vicious cycle of rising interest costs and swelling deficits is the first step on the road to fiscal ruin that has bedeviled many profligate governments throughout history. Emmanuel Macron, the centrist president struggling to stave off Le Pen's populist tide, has attempted to calm jittery bond vigilantes. His administration slashed this auction's size by nearly a third compared to previous sales in a belt-tightening measure designed to stoke demand. But France cannot run from its debts forever. Even with robust economic growth, the Élysée Palace faces daunting borrowing needs exceeding €34 billion through year-end, according to UBS estimates. That precipitous financing cliff looms just as the European Central Bank begins winding down its crisis-era bond-buying programs, removing a crucial source of demand. This perfect storm of political instability, higher deficits, and diminished central bank support has all the makings of a debt trap, cautioned Emmanuel Carimelis, a strategist at UBS. French borrowers could soon find themselves ensnared in a doom loop of endless debt issuance simply to pay the failure tab of prior reckless deficits. Yet there are glimmers of hope in the looming darkness. Establishment parties have strategically withdrawn candidates in some districts to block Le Pen's paths to a majority. The center-right Republican Party has embraced a de facto stop Le Pen stance after bitter memories of her 2017 presidential bid sent markets reeling. Most traders expect Thursday's auction to clear at minimum bid levels, with major dealers like BNP Paribas and Crédit Agricole compelled to take down shortfalls as market makers. But an outright debacle cannot be ruled out given the vast uncertainty surrounding the legislative vote and investor fear over France's long-term debt trajectory. Beyond cold calculations of asset pricing and default risk, this bond auction carries weighty symbolic importance. For it will be an early gauge of whether the French Republic can summon the fiscal fortitude and economic prudence to author its own redemption story, or if profligate populism has so gripped the Gallic spirit that France is resigned to scripting its own financial tragedy. Throughout Les Halles' storied markets and along the rain-streaked banks of the Seine, one can sense an undercurrent of unease among the French people, a vague sense that their republican inheritance is slipping away, surrendering to a brittle enforced equality more befitting an animal farm than a noble nation conceived in liberty. As Parisians ponder their choice over bottles of red wine and dizzying streams of philosophical discourse, one wonders whether the country's literary soul can still be salvaged. For what defines a people more than the myths, stories, and values we enshrine as our secular religions? America enshrined self-made enterprise in its pursuits of happiness, while France hallowed the republican ideals of liberty, equality, and fraternity. These beliefs once instilled modesty and thrift as the dual anchors steadying French government finances through the stormiest economic seas. But those virtues have steadily eroded over the decades as the delusions of democratic control over financial discipline seduced generation after generation. Freed from the ancient constraints of frugality and balanced budgets, a peculiar French decadence has poisoned the well of public finance. Each new lavish overspending program, pension sweetener, and tax cut has been justified as the will of the people. Moderate reformers counseling sacrifice have been lampooned as out-of-touch elites cruelly forcing austerity on democratically sanctioned appetites. This moral hazard has calcified into a massive debt overhang topping 115% of GDP. A cold slap of reality interrupting the Gallic reveries about prosperity without renunciation or responsibility. Now the piper has finally arrived to collect his overdue tally, at the most perilous political moment. Will the French people uphold the lofty republican ideals inscribed in their culture, albeit buried under decades of debt accumulation? Or will they surrender to the easy allures of populist deception and succumb to an economic death spiral rivaling Greek or Weimar tragedies? All eyes turn to Thursday's bond auction for early omens pointing the way forward on France's financial future. It may prove a mere economic ritual signifying little beyond next quarter's spreadsheet projections. Or it could augur a deeper moral reckoning over the French nation's soul. An oversubscribed auction would signal markets still harbor faith that the holistic spirit of liberté, égalité, fraternity might chasten spending appetites and save France from its worst populist impulses. Conversely, a failed sale would confirm that this former beacon of Enlightenment values has become just another transitory place detached from any animating civic truths. A people condemned to roam the shifting sands of pure democracy disjointed from any counterweight ideals tempering fiscal profligacy. In many ways, whichever outcome prevails will be a leading indicator for whether our era marks Western civilization's re-embracement of eternal human wisdom and virtues tempered through the ages, or an inflection point where history discards its hard-forged restraints in pursuit of unearned satiety and painless utopias. The road forward will not be easy, nor devoid of sacrifice and heartache for the French people. As the saying goes, no penance is too severe for rebirth into republican grace. For only once France has fully exorcised the demons of delusion through honest introspection can the promise of a nobler, solvent future be reclaimed beneath the light of liberté's torch.